morning, Steve Reed in Chicago with the morning grain comments. Well, looking at my screen earlier, I had everything in the red except the U.S. dollar. Stocks are lower, crude's lower. At the time, gold, silver, copper, coffee, cocoa, sugar, cotton were all lower. Beans were lower by as much as 9 to 10 cents. Now it's down 5 at 13.71 on the nose. Meal's down 2, while oil's down 36 points. In the corn, corn at one time was down 4 cents. It's unchanged right now. Chicago wheat's down 2. Chicago wheat's, unchanged. KC's down 2. And Minneapolis is up 3 cents. Yesterday we saw a pretty strong rally in the Kansas City and Minneapolis wheat futures, and some people feel that the market finally saw that Canada crop might be down, Australia might be down, Argentina will be down, Brazil quality in the southern is dropping with import demand. Usually they buy from Argentina. It's been since 2014 since they bought wheat from the U.S. The Russian prices are still below U.S. and it looks like they're going to be exporting a record amount of wheat, which offers resistance to the marketplace. Over in the corn, really the only new news out is that the average trade guess for the September report is 173.5, down from 175.1. And the range was 171 to 175. Given the demand outlook, that range, even the low end of that range, could be bearish to corn futures. The demand, especially on the ethanol side, is strong, which could suggest cash basis remained relatively firm, even going into harvest. The funds are unwilling to buy back their short corn position as harvest is beginning in the U.S. The soybean yield, 50.2 versus 50.9, range of 49.6 to 51. For 49.6 yield, I think is friendly to the bean complex because it lowers the carryout possibly with the average trade guess looking at a carryout of 207 for 23-24 versus the U.S. 245. In corn, they're still looking at a carryout of 2140 versus 2202, which is bearish. And the wheat carryout remains around 615, which also offers a little bit of negative bias to the wheat. We saw where Argentina farmer is only sold about 12 million tons of beans versus 25 last year. Exports for meal licenses 12 million tons versus 25. China over the last 6 years has seen an increase in annual soybean imports an average of 1.6 million tons. Prior to that, their annual increase for the previous 6 years was 6.8 million tons, raising questions about their demand for soybean imports. And if Brazil crops continue to grow to record high, Brazil will be able to satisfy that slower demand versus U.S. We also noted that CONAB increased the corn crop to a record 131.8 million tons versus 113 last year, but the USDA is at 135. So choppy trade going into the USDA report and weaker commodity prices.